3 months ago, a solo seller put $7,000 of sales into a personal account. The bank flagged it, the loan was declined, and they were forced to close a growth window. If that sounds like you, listen up.
Welcome to Capital Conversations. Today, a practical 90-day plan to turn messy income into a lender-ready file. I'll keep this tactical. Exact documents, exact scripts, and a prioritized checklist you can act on this week.
Want to know what underwriters actually care about? It's simpler than you think.
Separation, consistency, credible documentation, clear cash flow. 4 things, that's it.
I had one client, $600 a month in side revenue, all routed through a personal account. Once we moved the deposits, added a 1-page memo for past transfers, the underwriter nodded. Not because the numbers were huge, but because the story finally made sense. Okay, first corner to fix, legal and banking separation. Haven't done this yet? Form an entity. Get an EIN. Open a business checking account and route future sales there. Change your merchant profiles and payment processors to the business name. Small administrative moves like those raise credibility fast. A fast fix. Screenshot the merchant setting that shows deposits routing to the business account. Put that screenshot in your file. When an underwriter sees it, they mentally check one box and move on. Little proofs matter. Next, stabilize revenue so you can tell a believable story. Lenders love patterns. If your monthly receipts bounce wildly, create an invoicing cadence. Offer a small subscription or retainer. Even $100 a month of recurring revenue is meaningful. Batch invoicing twice a month. Require deposits on larger orders. Launch a limited monthly box or a consulting retainer. These are short experiments that smooth cash flow and give you a rhythm lenders can follow. I thought my books were fine until the underwriter asked me to map every deposit to an invoice. That was my wake-up call. Exactly. That mapping is the next piece. Minimal, lender-ready books. Focus only on what moves the needle. Essentials to assemble. Bank statements with notes, a month-by-month profit snapshot, an accounts receivable schedule, copies of major invoices or contracts, and proof of leases or vendor agreements if you have them. Like the florist who kept receipts taped to boxes. Once we matched deposit dates to invoices, the bank approved a $10,000 line. Concrete links beat fancy reports. Quick bookkeeping fixes. Reconcile the last 2 to 3 months of bank statements. Categorize major expense buckets. Produce a 1-page P&L showing gross revenue, COGS if any, and net cash flow adjusted for owner draws. If records are messy, add a short memo per month explaining unusual deposits or personal transfers. Those memos are gold to an underwriter. They show intent and control. Template tip. Use columns. Date, deposit source, invoice number, note. That's it. That minimal table makes mapping deposits to sales fast and defensible. Prepare a bank statement binder or a digital folder with sticky note style annotations. For each deposit, note the invoice number and sales channel. For transfers to personal accounts, label them owner draw with a date and brief reason. Now, match the funding product to where you are. If you're just starting separation, aim for a microlender or community program. If you have 3 months of business-only deposits and a 1-page P&L, pursue a small bank LOC or SBA microloan. Avoid expensive online term loans or equity dilution early on. Pick the product that preserves control and minimizes cost of capital until your records prove scale. Let's make this concrete with a 30-60-90 plan you can follow. Days 1 to 30, open a business checking account, get an EIN if needed, and collect 3 months of business-only bank statements. Also in month 1, produce that 1-page P&L and start a transaction memo for prior transfers. If you need help, buy an hour with a bookkeeper. Prioritize reconciliation over fancy reports. Days 31 to 60. Stabilize revenue. Launch at least one recurring revenue item. Set an invoicing cadence and collect evidence. Invoices, subscription signups, and processor screenshots that show deposits to the business account. Start a KPI tracker: monthly gross revenue, average transaction size, customer count, and days sales outstanding. Keep it to one page. Lenders prefer a clear snapshot to 10 scattered spreadsheets.
Days 61 through 90. Assemble the lender package. Finalize the bank statement binder. Compile major invoices and contracts. Prepare an accounts receivable schedule, and draft a one-page executive memo describing who you are, what you sell, and why you need the loan.
Hi, I'm Glenn from Acme Goods. I run a single-owner LLC, and I'd like to discuss a small business line of credit. I have 3 months of business bank statements, a one-page profit snapshot, and a receivable schedule ready. Who's the best person to review a short package?
If an underwriter asks about past commingling, answer honestly and show remediation. Say, "We had historical personal transfers. I produced a ledger that explains each transfer and moved all future revenue to business accounts." Honesty plus a fix often beats hiding the problem.
2 short scripts you can use right now. Phone. Hi, I run business. I'm seeking a small line of credit. I have 3 months of business bank statements and a one-page profit snapshot. Can I get a short checklist of documents to submit?
Hello, I'm X, owner of business. I'd like to submit a short package for a business line of credit. I have 3 months of business statements and a one-page P&L. Who should I send this to?
Before we wrap, 3 immediate actions. Open your business checking account and route deposits, reconcile the last 3 months and add transaction memos, and build a one-page P&L plus a KPI tracker. Do those and you'll already be moving the needle.
Do the 3 steps I gave. Within 90 days, a boutique owner I worked with moved from a declined application to a $15,000 line of credit. That's real progress, and you can get there too. Download the checklist in the episode notes. It includes the reconciliation ledger template, the one-page P&L, and sample email and phone scripts. Subscribe to Capital Conversations for follow-ups where I walk those templates step by step.
Thank you for joining us on Capital Conversations. I hope today's discussion gave you a practical, prioritized path from messy side hustle finances to lender-ready financials. Remember, lenders don't expect perfection, but they do expect a credible story and evidence you're fixing the problems. Keep building. Let's talk capital. Until our next conversation.